of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to yet another episode of Business Standard Banking Show, where we bring you the story behind the major developments in the banking sector. Today is 8th June 2023. I am Ruchika Chitravanshi. So let us start with what we have in store for you today. All important stories have to be followed up. So in our cover story, we find out the implications of the 2000 rupee notes withdrawal. Nirmal Jain, Managing Director of IIFL Finance, spoke to us for our Banker's View segment. In Banking for You, we will explain RBI's pause and pivot strategy. Tracking the big news development of the day, our in-house expert Tamal Bandyopadhyay will talk to us about the latest on the RBI's monetary policy. At the end of the show, we will tell you the results of last week's poll and the question for this week. So the withdrawal of the 2000 rupee note was one development that affected us all. But now, weeks later, what has been the impact of this move on banks, on people like you and me? Watch this report by Raghu Mohan to find out.
Last week, State Bank of India said it had received 14,000 crore rupees worth of 2000 rupees currency notes in deposits. By September 30, when the deadline for depositing or exchanging these notes ends, it is likely that little of these notes will be left with the public. This has raised a few interesting prospects. Will the surge in deposits in the banking system be large enough to boost liquidity dramatically? Will this, in turn, lead to higher demand for government securities or G-Secs by way of the statutory liquidity ratio or SLR? Will it lead to higher currency refill charges for banks even as they earn more by way of interchange on ATM withdrawals? But first, let's look at the trend in 2000 rupees banknotes in circulation since their introduction, and what will be the immediate impact of the withdrawal of these notes for you and me.
The ecosystem is well tuned already for a long while. These 2000 rupee notes were not available to the common people for a long while. So I think the 500 rupee notes, even dispensed at ATM, have been good enough. And the digital ecosystem is growing up well as desired. So I think the gap is not being felt at all.
What of the return of these notes to banks? SBI EcoWrap pointed out in a report that banks were already holding some of these notes in their currency chests, so the impact on deposits would be limited. Assuming that 10 to 15% of the 2000 rupees notes are in currency chests, the rest would be spent by consumers, either direct purchases since it is still legal tender, or by exchanging for smaller denominations. Thus, not more than 1 trillion rupees would be additional deposits in banks, said SBI EcoWrap. Now, this might technically lead to additional demand for G-Secs because of the SLR, which requires banks to invest 18 rupees in G-Secs for every 100 rupees taken in deposits. But banks currently maintain access SLR of around 28%. It's unlikely to lead to an increase in demand for G-Secs. Another fallout is that the decline in currency in circulation with a resultant increase in banking liquidity will ensure that there is no immediate need for a cut in the cash reserve ratio or CRR. On every 100 rupees in deposits, 4 rupees 50 paisa is impounded as CRR by the Reserve Bank. At the retail level, will the complete withdrawal of 2000 rupees notes mean that banks and white label ATM deployers get to earn more by way of interchange, which is currently 17 rupees per swap after the first initial free transactions, as customers have to punch in more of them. This is unlikely as the average ticket size of cash withdrawals is about 4,500 rupees or thereabouts. and the largest single swap pullout at 10,000 rupees is more of an outlier. While it's speculated that the cost of loading ATMs will go up as more cash in denominations less than 2,000 rupees will technically mean more trips by cash vans for refills, the reality is that this denomination of currency is not widely circulated anyway. Will the 2,000 rupees note continue to be legal tender after the September deadline? RBI Governor Shaktikanta Das has stated that a decision on this would be made closer to the September 30 deadline for deposit or exchange. Now, let's try to do some crystal ball gazing. Will the 1,000 rupees note make a comeback?
See, the fact that 500 rupee note was good and people are able to utilize it and high value are being transacted on digital now with that UPI now in the larger ecosystem, I don't see a need of a 1,000 rupee note also.
Come to think of it, the 2,000 rupees note withdrawal actually looks more like a storm in a teacup.
Lots of takeaways there. The cost of loading ATMs may not go up significantly, and likely the same goes for the impact on deposit. For our next segment, Manojit Saha had a chat with Nirmal Jain, Managing Director of IIFL Finance. They spoke on a variety of issues ranging from inflation and interest rates to the GDP growth numbers. Over to Manojit now.
Hello and welcome to the Business Standard Banking Show. IIFL Finance, a systemically important non-deposit taking NBFC, offers products like home loans, gold loans, loans to small businesses, among other things. It has a plan to increase the asset under management to 1 lakh crore over the next 3 years from about 65,000 crore now. Nirmal Jain, Managing Director of IIFL Finance, is here with us today to share his views on the NBFC's growth trajectory. Mr. Jain, welcome to the show.
Thank you. Thank you so much, Manojit. Thank you for having me here.
While announcing the fourth quarter earnings, you said there was some slowdown in the affordable home loans due to interest rate increase. Given that rates are going to stay elevated for at least a year or so, how do you see credit offtake in FY24?
I think credit offtake will improve in FY24, primarily because rates seem to have paused. So many times when rates are increasing at a very quick frequency, then and a very quick periodical interval, then the expectations for rate increase also go up and people are concerned about further increases. So I think one good thing about India is that inflation has been in control and a rate increase seems to have paused because as we see that the inflation numbers are looking quite acceptable and good. So in that context, I think as a rate increase, even if we aren't expecting any rate cut anytime soon. Even if rate cuts to happen, probably they'll take about at least few quarters before they can start. But the pause in the rate itself is a good news from the sentiment point of view. And also this is supported by faster growth in the economy. The accelerated growth in the economy, and you have seen the GDP number also. They're surprised on the positive and the upside. And we are ending the year with 7.2%. What is important to understand is the 7.2%, although it may be down from 9.1, but is significantly better. Okay, we are the fastest growing large economy in the world. And when the most of the global economies this year are going to face a significant slowdown, India has shown tremendous resilience and still a strong growth. So I think the global economy growth average around 2.4, which is down from say 3.1. And that also is a little higher because of averages include India. So in that context, I think the environment is positive. Even if, and also the liquidity again has become fairly benign. I would expect the credit offtake will be healthy in FY24 and maybe slightly better than FY23 in the affordable housing segment as well as other segments that we operate in.
In FY23, the total AUM growth of IIFL Finance was about 26%. Do you expect FY24 to be better than FY23?
I think on the whole, it should be similar. 25-26% is a very good growth to sustain on the enlarged base and making sure that credit quality and margins both are not compromised.
Just wanted to understand the risk assessment. Is it completely done by banks, or since the NBFCs have 20% share in the loan, so some risk assessment is done by the NBFCs also?
Good question. Typically, what banks do is done by both actually. Because what banks do basically that they agree upon the process and risk parameters, and we adhere to that. So we act more like bank's agent, and also so at the source we do it, but typically banks do it again. So they'll go through the documents, and every bank will have a different process to do it. But in a way, if you really ask me, then co-lending risk assessment is done by both banks as well as NBFC.
The other area was you have expanded the branch network very rapidly in the last 2 years. So do you think the branches have now reached a critical level and such rapid expansion may not be required going forward?
The branches still have potential to grow, and we still have potential to set up new branches. But having set up very aggressively a number of new branches, more than 1,000 over the last 2 years, this year we have to pause and make sure that the branches become productive and our cost to income ratio comes down. Once we, maybe after 12 to 18 months, when we make these branches fully productive, we can embark upon the next phase of growth. And we'll again make an assessment of the circumstances and the environment at that point in time, including the digital penetration and the opportunity to grow digitally rather than through branches. But at this point in time, the branch network has slowed down significantly.
What are your thoughts on converting IIFL Finance into a bank, a universal bank or a small finance bank? What kind of business model you are looking at?
Honestly, at this point in time, we are not looking at that scenario. We just want to grow and consolidate our business model as an NBFC for the time being. It's some time away, and we are also waiting for guidelines for digital bank, which Niti Aayog has floated a paper. RBI must be considering and evaluating it. But for the time being, we don't have any plans.
And finally, what is the plan to unlock value in some of your subsidiaries in terms of listing and also in terms of bringing in a strategic investor? We have seen the Abu Dhabi Investment Authority has come into housing finance as a strategic investor. Any such talks are underway to bring in more strategic investors?
So strategic investor or the private investor that we got in our housing finance company, ADIA, the Abu Dhabi Investment Authority, they are long-term investors. And their horizon is typically 7 years. So, at some point in time, for their exit, these companies may be diverged. But at this point in time, in the near future, in the foreseeable future, will continue to be consolidated as we are. So, the demerging and listing subsidiaries is like maybe a 5 to 7 year thought process and not immediate.
5 to 7 years time, so nothing.
Like you see, the private equity investors have that much of time frame easily available for their exit.
Right.
And other than that, I think the unlocking value is not the consideration, but if they become size in terms of profitability and the market standing large enough and the investors want an exit, that is the time we can consider listing them.
Mr. Jain, thank you very much for your time and thank you for speaking to Business Standard.
Thank you. Very nice talking to you. Thank you so much.
Nirmal Jain gives us some positive news there, such as healthy credit offtake and inflation numbers looking under control now. Now, whenever we are talking about monetary policy, two words get spoken a lot: pause or pivot. What do these words really mean? Manojit Saha explains in our next segment, Banking for You.
On April 6, 2023, when RBI Governor Shaktikanta Das addressed the media after announcing the MPC decision to keep the repo rate unchanged, he emphasized that this was just a pause, not a pivot. Since then, Governor Das has repeated the statement several times. According to the Oxford Dictionary, pause means to stop talking or doing something briefly before continuing. And pivot? Pivot is to turn or balance on a central point, says the dictionary. So what did Das mean when he said it was a pause and not a pivot? Data tells us that Consumer Price Index or CPI-based inflation stayed above the RBI's comfort zone of 2 to 6% in most months in 2022. In fact, Average inflation was above the 6% mark for 3 consecutive quarters in 2022, January to March, April to June, and July to September. According to the RBI Act, average inflation staying outside the 2 to 6% band for 3 straight quarters constitutes a failure of the monetary policy. The monetary policy framework with explicit inflation targeting was introduced in October 2016, and 2022 was the first time the RBI failed to meet the mandate. To tackle this persistent high inflation, the RBI's Monetary Policy Committee raised the repo rate by 250 basis points between May 2022 and February 2023. In April 2023, the MPC decided to hold the rates steady. This was the pause. When Governor Das called it a pause, he meant that the RBI MPC was not ready to drop its guard on inflation just yet. That is, inflation remained the top priority. It maintained an accommodative stance, and calling it a pause meant the RBI was not ruling out further rate hikes. According to Das, RBI paused the April policy to gauge the impact of policy actions so far. RBI's monetary policy faces a trade-off between inflation and growth. If the inflation concerns are taken care of, the RBI MPC may decide on a new course of action to facilitate growth. Such a turn in monetary policy would be classified as a pivot. When Governor Das said it was a pause and not a pivot, the subtext was that inflation was still the top priority and the RBI MPC would not start cutting rates just yet to push growth upwards. How long is the pause likely to last? That would depend on the trajectory followed by inflation and GDP growth. If both stay close to RBI's projections, the pause may last a little longer.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
So now that we're all clear on what pause and pivot means for the monetary policy, it's time to get to our big news of the day. I spoke with our consulting editor, Tamal Bandyopadhyay, on RBI's monetary policy. Hi Tamal, welcome to the banking show. It is the RBI monetary policy rate, and as you've already seen, the RBI has kept the repo rate unchanged at 6.5%. Quite on expected lines. You also wrote the same thing in your column, whether it was about the RBI stance on inflation. That's all correct. So how do you describe the policy? Do you think it is a non-event?
No, I would not say it's a non-event. In fact, speculation is on, or rather, people are thinking how to describe this policy because the pause the second time, but the stance unchanged. Yes, last policy pause was pause, but not a pivot. So what is this time? Is it a hawkish pause or a dovish pause? I would say none of them. It's a very cautious pause. It's a very cautious pause. Reserve Bank of India governor said it's a pause for this policy. So he has theoretically kept it open. But I would like to believe that we have reached the end of the rate hiking cycle. He is not saying in as many words because there is a subtle shift in the way Reserve Bank of India looks at inflation. He had said that in his interaction with the media. So during the COVID time and in the aftermath of COVID, RBI was little flexible towards inflation, meaning the 6%, the upper band was fine with it, even though it has crossed at some time. But now he is determined to bring it back to 4%. So that's the change in it. So he's very cautious. He's not taking any chances because for sustainable growth, you need 4% inflation. That's the target. He has not shifted the goalpost. So that's the key takeaway from the policy.
Since inflation is coming down, why is RBI sticking to 5% figure?
Yeah, 5.1%. It has brought down by 10 basis points from 5.2. I think that's a wise thing to do. I mean, it's probably a little conservative approach because inflation will continue to remain 4.5 at around that level till October. But the base effect will catch on from October, so it will increase. So we need to see how far we go. And you have noticed also RBI has said that the latest MSP hike, which is not factored in this 5.1%. So that could be 10-12 basis point, partly factored in, but there could be an additional 10-12 basis point impact. So because essentially for the base effect in the second half, we'll see higher inflation. So at this point of time, Reserve Bank of India would not like to commit to a number which is not achievable. So rather it's playing on the conservative side.
The road is long towards the 4% target, right?
Yep.
So when do you expect a rate cut now?
Oh, that's a very critical question. Certainly not this year. I would like to believe till December we will see a continuous pause, provided the external circumstances remain as they are. RBI governor's tone, you see, is more confident than in the past. But what has changed is this: he's not happy with inflation coming down to less than 5%. He is sticking to the 4% target. And at this point of time, as a even if you have 5.1% inflation estimate, that is, and 6.5% the rate, so that we are in the positive rate territory. We need to see, unless Reserve Bank sees the inflation coming down to close to 4% on a durable basis, we will not see rate cut. So the earliest rate cut we can pencil in probably sometimes in February next year, 2024, not before that.
We do have time for one more question, and there is one issue which there is a lot of interest of viewers in it, and the governor also talked about it, is this 2,000 rupee note withdrawal, and 50% of the notes that were in circulation, he said, have come back to RBI. Do you think it has played any role in the liquidity?
Of course it has. If you see that this is one of the contributing factors to the increased liquidity in the system. And our RBI governor has emphasized that RBI will be nimble-footed, and it will act, to see that the inflation is in the right measure to support the growth and also to support the government borrowing program. Now, one of the contributing factors to the current slash of liquidity in the system is apart from the government spending, is the 2,000 rupee note coming, 1.2 trillion worth coming back to the system. So it has played a role, and probably this is also one of the reasons why Reserve Bank of India has stuck to the stance of withdrawal of liquidity. Had there been no such case, then the liquidity in the system would have been much less, and probably Reserve Bank of India would have looked at liquidity through a different lens. So one of the contributing factors to Reserve Bank of India sticking to the stance that withdrawal of liquidity is, I believe, this withdrawal of 2,000 rupee note and the kind of money that has come back to the system.
That's a very practical approach. And as you said, as far as monetary policy goes, this is a cautious pause. And maybe by February, we will see a rate cut. Thank you, Tamal, for all your thoughts and sharing with us today. Thank you so much, Tamal. We'll see you next week.
Thank you.
That was Tamal giving his take on the RBI's monetary policy. We are now at the last segment of our show, the BS poll. Last week, we asked you, should credit card holders pay 20% TCS on foreign spending? Only 36% of our respondents felt they should pay this amount, but 64% disagreed and said no. A key mandate of the RBI is to contain inflation. Over the past few months, inflation has started to come down, but it is still not at the expected level. So we are asking you this week, has RBI managed to contain inflation? Our poll is open from today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.